won't stop till I hear him say,
Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, and foreign exchange, please go ahead and consider subscribing to the YouTube channel. Ladies and gentlemen, I hope that everybody had an amazing weekend. We have a real quick, fast, fundamental, and macro overview for you guys. Monday breakdown. No interesting price action this week. However, I did mention to you guys that I will be looking for intraday trades on Ethereum as well as XRP. A lot of people message me and ask me what broker I utilize to trade leverage crypto. I utilize the broker CYPRX. I don't have an affiliate link for them. I'm not going to sit here and try and get you guys to sign up with my affiliate link or anything like that. So you guys are more than welcome to go and check them out. Again, that's CYPRX. They offer multitudes of cryptocurrencies that you guys can trade leverage. However, if you're not used to trading leverage or you don't have a profitable trading strategy to back you up and give you an edge in this market, I don't suggest it to the beginner and novice trader. All right. With that being said, we're going to start this fundamental macro overview with this interesting article from Yahoo Finance that caught my eye. It says, "Are Americans getting financially dumber?" That's what caught my eye right away, that they're actually putting the word dumber in a headline, kind of blatantly obvious that they're mocking the majority of individuals out there. But it reads, "It's hard to say. Financial literacy in this country has steadily declined over the last 12 years, according to a recent study, but the root cause remains elusive." So what really caught my eye is the ending of the sentence, and that is, "but the root cause remains elusive." Guys and gals, the root cause does not remain elusive. It is because they lack the ability to teach financial literacy to our youth in our school system. So if you're an individual watching this and you have children, or maybe you're just an independent thinker or anything like that, take it upon yourself, go do your research, join a mentorship program, study, read books, read articles online, go to investing websites, start reading, and literally educate yourself on financial literacy. It will only do things for you in your future that will benefit you financially. Okay. Now, obviously, of course, nothing that I constitute here is financial advice, but what I suggest, especially if you're in the crypto or forex markets, is you take it upon yourself to get a mentor, regardless if that's us here at CYPRX that you choose. I'm sure that a lot of people like our contingency plan. They like the confluences that we teach, and the way that we talk about price action is easily digestible. If you're one of those individuals, then of course, obviously the CYPRX mentorship link is in the description down below. I hope that people aren't out here getting scammed and manipulated into believing that support resistance methodologies and trend line trading and all of that crap is what's going to work for you in the market, because you will soon come to the realization that that is not a reality. Aside from that, guys and gals, if you're just an investor in general, take it upon yourself. There's thousands of books out there that you guys can go and read. Remember that knowledge is power when implemented properly. You can't just go sit, read, and accumulate books and all this knowledge on YouTube and things of that nature, and then just expect it to make you a millionaire overnight. You actually have to take it upon yourself and go and implement the knowledge that you're learning properly, test it out on a demo account, and then hopefully go and test it out in the live market. Nothing that we constitute here is financial advice. Okay. Coming over here to my Twitter, continuing with this macroeconomic breakdown for Monday, I said to you guys, it is insane to think that more than 92% of the population is unaware that the elites have an agenda to transition our financial ecosystem to a digital economy by 2030. Regardless of what crypto you are a supporter of, the transition is coming and the majority of people will miss out. And that is a fact. Guys and gals, if you're an individual that holds cryptocurrency, regardless if you're a day trader or a long-term hodler, you fit into a small percentage of the population as of right now. They are trying to get people to sell their cryptocurrency. They are causing FUD in the market. And I am here as a supporter and as an influencer to show you guys that that is not the case amongst these major financial institutions. So right here, just to show you guys, proof is in the pudding before we get into the macro perspective of things. Lists of big financial organizations in the world. You guys can see Industrial Commercial Bank of China, Morgan Stanley, Citigroup, Wells Fargo, Goldman Sachs, UBS, Bank of America, JP Morgan Chase, right? These are all common financial organizations that you guys have heard of. Guys and gals, the headlines speak for themselves. These individuals are not sleeping on this digital revolution. We see right here, and I'm just going to read the headlines. I'm not going to go into extreme detail, keep this video kind of short. We see JP Morgan seeking to hire to push banking products into metaverse crypto companies. Boom. We see over here, latest in crypto hiring, Morgan Stanley exec jump shipped into crypto. We see over here, banking giants Wells Fargo and HSBC to use new blockchain platform to settle global FX trades. Guys and and gals, the FX market is the biggest market in the world, transacting over $6 trillion per day. That is insane to see this type of a headline. We come over here, Citigroup furthers crypto push with 2 digital asset hires. Coming over here, last but not least, the next $30 trillion is going to this type of crypto asset, according to Bank of America strategists. So again, the major banking institutions are adopting this cryptocurrency technology. Do not allow yourself to be manipulated and flooded out of this market. I understand that we are in a temporary bear market right now, but understand that when the macro environment changes and switches perspective, and all of these major banks and all of these major economies switch from hawkish to then dovish, guys and gals, the macro perspective is going to switch, which leads me over here to this tweet that I said to you guys just a couple days ago. The Federal Reserve policy stance will turn around in the next 3 to 6 months. 2023 cryptos will pop. Watch. One more rate hike, maybe even 2, and then they will switch up and slam on the brakes. Get your bags ready, guys and gals, because 2023 will be a year to remember for utility-driven assets. I'm not an individual that's going to sit here and say that, XRP is going to be the leading or number one world currency or whatever the case may be. I've never given you guys any type of bullish moonboy price prediction. I've been an investor in XRP since 2016, 2017. XRP is one of my biggest holdings. Am I a firm believer in other cryptocurrency projects? 110%. I don't think that XRP is going to be the one cryptocurrency to rule the world. I'm not one of those bullish moonboy hypists that's going to sit here and give you guys a $1,000 price prediction. Personally, I'm accumulating enough XRP to where if XRP price even goes to $15, $20 to $30, I will become a multimillionaire. And I've said that to you guys in my past tweets. With that being said, I want to play some video snippets for you guys, just giving you guys a thread from something that I posted a couple days ago. We see here, regulators are stalling for a reason. 2019, CV19, a great reset motion starts. Guys and gals, pay attention to these dates because this is an interesting economic and macro thread that I posted to you guys and how everything is extremely correlated. We see right here, March 2020. What happened in March 2020? The government first round stimulus to the economy and the crypto bull run started. Guys and gals, go look at the charts. The charts do not lie. And March 2020 is when the cryptocurrency bull run started. And that is exactly when the government started pumping stimulus into the economy. November 2021 was when we saw satellite images showing Russian troops near the Ukrainian border and crypto bear market started. Guys and gals, go look at the charts. November 2021 is when the decline in the cryptocurrency market actually started. And that is exactly when the satellite images of Russian troops, again, remember, when there is war and there is political uncertainty and things of that nature, what happens? People flee to the United States dollar, the safe haven asset. Guys and gals, go correlate the charts with the DXY and the crypto market. I showed you guys in the past video how to do so. We see down here the thread continues. In 2022, the crypto prices are 80 to 90% discounted from all-time highs. Bullish crypto fundamentals do not reflect crypto prices. It is clear that prices are artificially suppressed for a reason, guys and gals. Bear market continues into 2023. Year-end 2023 regulations come into place, and 2024 utility bull run starts. Guys and gals, that is my prediction. Take it or leave it as you want. Again, I've been studying fundamentals in the macro perspective for over 7 years now. Guys and gals, I have some video snippets to play and some things for you guys to take into consideration. Before everybody gets all bullish hypey, really take into consideration the manipulation that's on Twitter and YouTube, and that the majority of individuals are, again, leading back to this article right here, financially illiterate. Okay, they have no financial literacy. Okay, and they just don't do the proper studying. All they do is give into these bullish hype cycles and things of that nature, and those are the individuals that buy tops and get wrecked. Okay, I said to you guys, last but not least, it is all pre-planned, pre-engineered. The global financial reset 2022 was a liquidity grab tactic to build momentum for what is really coming over the next 2 to 3 years. Multiple utility tokens will run our new financial system. Wake up. YouTube and Twitter hype are part of the game. Okay. With that being said, I want to take your attention over here to these video snippets before I read the rest of these fundamental articles for you guys. So just take a quick listen.
Those calls turned out to be correct. But now, couldn't the reverse also apply? You've got hawkish stances from all central banks around the world. Like you pointed out, it's unlikely that they're going to reduce rates or pivot anytime soon. Don't fight the Fed, Jim. Shouldn't you short?
Yeah, don't fight the Fed. You should be very careful. Neil Kashkari was on a podcast 2 weeks ago. He's the president of the Minneapolis Fed and famously said, I was happy to see the market go down after Chairman Powell's speech in Jackson Hole 2 weeks ago. They're walking around the Fed going, we want inflation down. How are we going to get inflation down? If you're an investor listening to me, they want to make you stop buying things by scaring the hell out of you with a falling stock market. That's what they want. Don't fight the Fed.
So with that being said, guys and gals, just understand that the macro environment is still a little bit shaky right now, and we are going to still see some volatile price swings and a lot of uncertainty in risk on assets, okay, like the cryptocurrency market. With that being said, only invest with money that you're willing to lose at this current moment in time, because if you do not have a handle on your emotions, guys and gals, for example, you could have put $1,000 into this cryptocurrency market until when the Fed rates come out, the Feds could raise interest rates, right? And then guess what? Most likely what's going to happen? Risk assets are going to drop off the face of the earth again, and you're going to see a depreciation in your portfolio. You didn't do your studying. You think that this cryptocurrency market is a scam, and then boom, you're one of those statistics that becomes, a victim to this market. And guys and gals, you don't want to be that type of individual. Here's another video snippet. Again, this is probably one of my most favorite news channels right here. No FUD, no bullish hypey on this channel. It's called Kitco News. I watch this almost every single day and night. I stay up to date on this. This is just one of my favorite YouTube news channels that's for free. Okay, guys and gals, take a listen to this other part of the video snippet.
Will happen. The EU is meeting on Friday, and they're going to give us a magic rabbit out of a hat that's going to fix this problem, because that's the way it's always worked for the last 25 years. Now, that's true. It's always worked that way for the last 25 years. But what I've argued, the game changer now is inflation. The Fed can't drop rates to zero and print the market back to new highs like it did in 2020 when we got a pandemic, and we all thought that was going to be the end of civilization.
Right.
The Fed could buy $100 billion a day of treasuries to make the market go up. They can't do that now with all the inflation. So I think that there's a little bit of hopium among investors right now. I think markets are going to continue to struggle. I don't think June 14th was the low of the year. Within that, anything that benefits from inflation, industrials, basic materials, energy, will probably do better. Especially energy, I think, because the market's gotten so oversold when they talk about crude oil prices, will probably do better than things that you would consider more long duration assets like financials and technology, as interest rates continue to head up and the economy continues to kind of limp along.
So June was not the low. I remember back in August 2020, where just
ultimately, in some other tweets I've said, while I've pointed out that Bitcoin and Ethereum are like buying a 3x or 4x or 5x S&P fund, they do the same thing. They just go up or down more. That ultimately they are not just a highly leveraged version of the NASDAQ or the S&P 500. I think once we get through the merge and people understand what this means and that it can open this up to being a new financial system, they'll start trading more independent of what the S&P or the NASDAQ does. But you're right, over the short or medium term, that's not going to happen a week from Sunday. And that ultimately, if the stock market is going to continue to struggle because of inflation and interest rates are going to continue to go up, then the highly levered version of risk, which is cryptocurrencies, will probably struggle. But over the medium to long term, what I want to see more than that is I want to see them start to approach a zero correlation with stocks. Then it's not just wait for the stock bull market, wait for the Fed to cut rates and print money to get Bitcoin back to 70,000 and get the S&P back to 4,800.
That's right.
That Bitcoin and Ethereum wind up finding ways to go back to their old highs, independent of whether or not the stock market is going up or down.
Okay, guys and gals, see, I can completely relate to what it is that individual was saying based off the research that I've personally done and off this tweet that I said to you guys. I said the Federal Reserve policy stance will turn around in the next 3 to 6 months. 2023, cryptos will pop. Watch one more rate hike, then they will switch up. Guys and gals, I'm a firm believer that eventually all of this macroeconomic perspective will turn around, and we will see risk on assets like cryptocurrencies do a complete 180 and return back to their all-time highs. Right now, we see that the stock market and the cryptocurrency market are heavily correlated. Eventually, that will cease to exist. We will see a utility bull run, guys and gals. I'm a firm believer. But right now, we need to understand that the macroeconomic perspective takes precedence. So coming over here, I just want to share some fundamentals with you guys that the majority of banks around the world are hawkish. Okay, so we see right here, US dollar forecast ahead of CPI. The US dollar bulls have seemingly halted their ascension as they wait for the US inflation data this Tuesday. The market is predicting that August headline CPI may edge lower by 0.1%, further strengthening the case that US inflation has peaked. Maybe we will see, guys and gals, tomorrow is the day. Over here, we see that the Bank of Japan, okay, the Bank of Japan set to end COVID relief scheme, but no change to loose monetary policy. The COVID relief scheme, meaning that they are stimulating their economy, they're quantitatively easing their economy, they're buying Japanese government bonds, things of that nature. Some things that I've relayed to the CYPRX students that was making the Great British Pound against the Japanese yen extremely bullish and making the Japanese yen extremely bearish. The ECB promises more rate hikes after unprecedented increases. Again, guys and gals, we see the majority of banks across the board are extremely hawkish right now. Even the Bank of England, we come over here, the Bank of England, to press on with rate hikes, even as inflation forecasts a fall. Guys and gals, take the macro perspective into accountability when you guys are trading these markets. Understand what is really happening, what really affects the markets. The Federal Reserve interest rates are the main driver for risk on and risk off assets as of right now. Last but not least, I want to leave you guys with this tweet. It's a little crypto success tweet. And I said to you guys that there is a very small percentage of the entire population that owns cryptocurrencies, and people still cannot believe that we are early. Steps for crypto success. Nothing, guys and gals, that I'm about to relay to you is financial advice, but just some things to take into consideration. Number one, decide whether you are a day trader or a hodler / investor. That is the most important thing because there is a difference. I've mentioned to you guys before that I trade leveraged in the cryptocurrency market. That is completely different than buying and selling and holding something on Coinbase. Okay. With that being said, number two, learn psychological control and superior technical analysis. Guys and gals, you do not want to be buying and selling in random spots. I know that the majority of influencers out here on Twitter and YouTube are just consistently telling you that they're dollar cost averaging into positions. The question is, where are they doing these things at? Where are you doing these things at? Guys and gals, you want a sound technical analysis approach that is going to give you an edge in the market, that is going to teach you all how to dollar cost average or scale into positions or leverage the cryptocurrency markets with an edge in this market with a higher probability for a trade to go directly in your favor. Here at CYPRX, that's what we attempt to teach our students step by step from A all the way to Z, from a beginner's perspective to a more advanced perspective. If the technical analysis that we teach here on the YouTube channel is easily digestible for you guys, go ahead and consider joining our mentorship program. Number three, decide how much risk you can handle. This is probably the number one thing that I see investors coming into this crypto space not take the time to do. They say, oh, you know, I got this $1,000 paycheck from work and I don't really need it right now. I'm going to go ahead and pump that money into the market. And then they fail to take accountability, all of their expenses for the month. And then they get to the end of the month when they have to pay rent or their utilities. And guys and gals, guess what? They get stuck having to withdraw that money after it's depreciated in value, and they never decided how much risk that they can handle as an investor. Number four, don't take trading advice from idiots. Guys and gals, please be careful out there. Do not go out to individuals that will not show their face on YouTube and take trading advice. Do not go out there and take financial advice from people that have no credentials in this market. Please, guys and gals, be safe, be aware of scams, be aware of malicious attacks. Be aware that 90% of influencers on YouTube are just trying to get you to sign up with their affiliate link, and they're not making money from trading. They're making money off of your views on YouTube. Number five, do not buy tops. Again, that relates back to number two, where you guys need to have a sound technical analysis approach to this market. 90% of people in this market lose money, and it is because 90% of people do not come into this crypto space with a sound technical analysis and fundamental approach that gives them an edge on where to buy or sell in this market. Number six, if leveraged, protect your capital by taking profits and moving stops to break even. 90% of traders, again, get tapped out of this market because they don't utilize a stop loss when they're trading leverage, and they think they're going to make millions of dollars trading leverage, and they don't take profits and the market reverses. And then they get an ego when the market goes into their stop loss and they don't close out their trade, and the market ends up liquidating them with over leverage. Okay. I've seen it happen time and time again. Don't be that individual. Number seven, if hodling, accept temporary bearish price action. Guys and gals, if you are a long-term holder, understand that whatever price you buy cryptocurrency at, you need to understand that that is not the price that you are going to buy or sell at again. What's going to happen is you have a vision long-term, anywhere between 2 to 3 years, personally, in my perspective, is how long you should seek to first take profits if you're a long-term hodler. After that, give yourself a 5 to 7 year prediction. After that, give yourself a 10 to maybe 15 year prediction. Again, if you're a long-term hodler, have no emotional attachment to current price valuations. Okay. None, zero. Okay. Number 8, be realistic with your target areas. Again, like I've said in the past, you can accumulate enough of these utility assets where you don't need them to go to $1,000, guys and gals, to become financially stable. All right. During the next bull run. That's just my personal opinion, take it or leave it as you want. But coins like XDC, Casper, Hbar, I mean, XLM even, are all under 15 cents. And I mean, you could definitely accumulate enough, again, not financial advice, to where if they even hit $1 to $1.50, which are all very realistic price targets for these coins, you could be very, very significantly well off. Again, not financial advice. Number 9, be logical with your entry criteria. Number 10, ignore Twitter price predictions, guys and gals. All right, so I'll leave you guys with that tweet there. I hope that you guys enjoyed this macroeconomic perspective fundamental overview for a Monday breakdown. I hope that everybody enjoyed their weekend. I will see you guys in later videos this week, most likely breaking down some ETH trades that we have this week. I will definitely be monitoring the price action on ETH and XRP this week. I mentioned to the CYPRX students that that is one thing that I'm going to be paying attention to while I'm currently out of town. Blessings to you guys all. I will update you on price action throughout the rest of this week. As always, be cognizant, be aware, and I will see you guys in the next YouTube video breakdown.
Won't stop till I hear him say, la, 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 la.